Hello, everyone. I'm Sanskar Poddar, a trader in the foreign exchange, cryptocurrency, and derivative markets. Um, I'm here today. I'm going to be talking to you guys about a few different topics. The first topic that I'll be discussing is the difference between the stock market and the foreign exchange market. What is the stock market? What is the foreign exchange market? How does it differ? How do traders or investors have different types of strategies? So that brings me to my second topic, which I have, which is the different types of analysis that people do um, to invest or to trade. That I'll be going taking a little bit of a dive into that. And finally, the third topic that I'll be talking about is the role of human emotion while you trade in any sort of market, whether it's the foreign exchange market, stock markets, or any market whatsoever. So, that being said, I'm going to dive right into the first topic, which is what is the difference between the stock market and the foreign exchange market. So, firstly, stock markets. Let me explain what that is. So, now say there is a company which is valued at 1,000 rupees. The entire valuation of the company today is 1,000 rupees, and what happens is this 1,000 rupees is split up into 100 parts of 10 rupees each. Now, any person, if it is registered on the stock market, any person can purchase this share of a company. So, what happens is when you purchase stocks of a particular company, you are basically becoming an owner of that company of a particular amount of share, depending on how much you've got. So, if there's 1,000 rupees, I have 5 shares of the company of 10 rupees each. So, I have 50, I own 50 out of 1,000 rupees of the company. So that means that I am now a partial owner, 5% owner of the entire company. That's what the stock market is. The foreign exchange market, on the other hand, is not anything like this. So when a lot of people hear foreign exchange, they think I buy and sell, or people buy and sell a single currency. Like I'm buying US dollar, after the price goes up, I sell the US dollars. No, it doesn't really work that way. In the foreign exchange market, you trade in currency pairs. Like, for example, there's a currency pair called GBP USD, which is Great British Pound pegged against the US dollar. So we trade on the ratios of change between two different currencies. If I want to simplify it for you, let me put it this way. Now, I am a person who wants to trade. This is the explanation that I'm going to give is bare minimum, very floor level, very, very basic. It's obviously a little more complicated than this, but let me just explain the pure basics to you. So, I'm a person who wants to trade. I have a particular broker. Now, I tell the broker, I have, say, 200 rupees with me. Now, I tell the broker, I want to purchase the currency pair GBP USD. Right now, let's assume that the price of GBP, which is Great British Pound, is 100 rupees for 1 pound, and the price of US dollar is 50 rupees for $1. So now I tell him I want to purchase 200 rupees worth of GBP USD. So what the broker does is he gives me $4, okay, and I exchange these $4. I first give the broker 200 rupees. In exchange, he gives me $4. These $4 I give to the market, and they give me 2 British pounds in return. Now, over time, say the price of British pounds goes to 150 rupees now instead of 100 rupees. And now I say, okay, you know what? I'm good. I'm going to sell. So now the market gives me back 6 US dollars instead of 4 US dollars. Right? Is it six? Yeah, it's 6 US dollars instead of 4 US dollars, because now the price has gone up. And now I will give the broker back the 6 US dollars, and he will give me 250 rupees, keep a small commission of 50 rupees to himself. Essentially, I've made a 50 rupee profit. This, in a very, very base level, is how the foreign exchange market works. So there's a lot of borrowing. I borrow the dollars from the broker, and I borrow from the market and stuff like that. But this is how the foreign exchange market as a base works. So, what is the difference between trading in the stock market versus trading in the foreign exchange market? Now, there are three main differences, I would say. The first difference is in volatility, it is in volume of trading. So, what does that mean? Now, say a stock market. Now, in India, we have two stock markets, the Bombay Stock Exchange and the National Stock Exchange. So, I can trade on these two stock markets because of my geographical limitations. I can also trade on the American stock markets, but I have to go through a longer process for that. It's not very simple to be able to do that for me. So similarly, someone in the US can trade on the Nasdaq, and they can't really trade on the Bombay Stock Exchange very easily. So there's a geographical restriction. And if I want to throw some numbers at you, the largest stock exchange in the world is the New York Stock Exchange, which trades around 22 billion, which transacts around $22 billion every single day. However, the foreign exchange market is not geographically limited. If I am trading the currency pair GBP USD, someone in New Zealand, someone in Russia, someone in Japan, someone in New York, all of these people will also be trading the exact same GBP USD. And because there is no geographical limitation to this, the trading volume is a lot higher. So the foreign exchange market in 24 hours transacts anywhere between 5 to 7 trillion dollars per day. And because there is a lot more money flowing, the price fluctuations are a lot faster. So you can make money a lot faster, you can lose money a lot faster. But experienced traders can make money a lot easier. They would prefer to trade on the forex markets because they know they are able to predict the price a lot better, and they are willing to take those risks to be able to make those higher profits. So that's the first difference, volatility. The second difference, now, the stock market, the price of a particular stock is based on a lot of different factors, but mainly it is um, three things: demand and supply, and number three, the fundamentals of the company, how it is performing, how its services are being sold, how its products are being sold, the revenue, all that. Those all come under fundamental factors of a particular company, and those affect the price of a particular stock in a major way. And however, the foreign exchange market mainly functions only on demand and supply, because it the price of a particular currency has too many factors to take into consideration. The millions or hundreds or thousands of or 10 thousands of companies which function, the entire GDP, XYZ, there are too many factors to take into consideration, which because of which you value a particular currency. So all these factors taken into account, the main price fluctuation that happens in a particular day or a particular week happens because of demand and supply. That is, if more people buy, the price will go up. If more people sell, the price will go down. And let me tell you guys something. Now, when it's just an extra tip in between. So now, when you deposit your money in the bank, on say a fixed deposit, and they give you a 6 to 7%, 5 to 7% return per annum, they themselves trade on the foreign exchange market or invest in the foreign exchange market and get much higher returns and give you a much smaller chunk of it. So that's just a side note for you guys. So this foreign exchange market is something that a lot of institutions and banks play and make money off of. So that was the second difference, the kind of players, the reason why the price fluctuations majorly happens. And the third difference would be, there is, I mean, yeah, I know these are outlier scenarios, but I still like to take them into consideration. Now, there is lesser scope for manipulation to happen. Now, yes, we do live in a country, India, where, I mean, to be frank, a lot of illegal activities take place on the regular. Like black money, corruption is huge, huge, huge in India. So it is not hard to imagine that there would be a lot of fluctuations in the stock prices based off of insider trading. And hence, I feel that the foreign exchange market cannot be manipulated in this particular way because of insider trading or any unethical activities conducted by any specific business. And hence, even though its volatility is a lot higher, I would say that it is a lot safer than the forex market is a lot safer than the stock market. So that in a nutshell was my explanation for the differences between the stock market and the foreign exchange market. Now, now if you want to trade or invest in a market, you need to put in money. And if you don't know what you're doing, you're not going to be able to put in your money, right? Now, if you put in your money, you're going to be gambling if you don't analyze the markets in a certain way. So that brings me to my second topic, which is the different types of analysis in financial markets. These could be foreign exchange, this could be stocks, this could be derivatives, anything of the sort. So I'm going to quickly share my screen and show you the different types of analysis. Yeah. So the first type of analysis, there are three types of analysis: fundamental, technical, and a hybrid. So the first analysis, as I said, is a fundamental analysis. So fundamental analysis is reading the books of accounts of particular company if you're doing stocks, or reading the news, or taking in account the political factors which would affect the price of a particular stock or a price of a particular currency. So the um, when you want to talk about fundamental analysis, now this particular website is Money Control, and I'm just taking Zomato ka stock as an example. So in under Zomato, if I want to do a fundamental analysis, I will have to go down to the books of accounts. um, I need to look for it, guys. Hold on a minute. Charts, technicals. Money Control has changed its user interface. Financials here. This is what I was looking for. So there are two types of statements: the income statement and the balance sheet. The income statement is nothing but the profit and loss. And here I will be looking at the statement and seeing its growth, how it would be in the long term, how it could be in the short term. Will it really work well or not? I'll look in the balance sheet. So in the income statement, I'll be looking out for sales figures. I'll be looking out for expenses. I'll be looking out for all those type of things. In the balance sheet, I'll be looking at how much capital they have, what kind of liabilities do they have, are they able to turn profits and have reserves and surplus, are they what kind of assets they're holding. I could do a deeper dive into that and make sure that all that is right. Another important statement is the cash flow statement, where, as it says, cash flow, how much money is coming in or going out every year. So, or every particular span of time. That's another statement that people look at. Another thing is something called ratios. So, there is earnings per share and a few other things like that. And when you truly understand them, you'll be able to understand how do you analyze these and predict prices for the long term. So, fundamental analysis is usually done for long term predictions. Now, if I want to invest in a particular company for a span of, say, 10 years, 15 years, 20 years, 5 years, all these are very long term. And for that, I need to make sure I do a strong fundamental analysis, because if its fundamentals are weak, it is not going to grow in the long term and it is not going to give me the returns that I really want. That is the first part of fundamental analysis, looking at the books of the accounts, the market, the ratios, the cash flow, and stuff like that. Now, the other one is looking at the news. Obviously, Money Control itself tells you the news about the different markets, about the different industries, and stuff like that. So, for foreign exchange specifically, there is this amazing website called Forex Factory. And here it tells you the different news very clearly, whatever could be affecting the price of any particular currency or currency pair. So it's great to look at this particular website if you're doing a fundamental analysis in the foreign exchange markets. Now, that is done for the short term, and technical analysis is analyzing charts just like these. Okay, they could be any sort of charts. It could be for foreign exchange, like this is the euro to New Zealand dollar, or it could be for stocks. I don't have stocks here. I can add some stocks. Reliance, say. So it could be even for stocks where I could just look at the charts, I could make a few drawings, and I could predict. It could also be for crypto, and I could predict prices of the markets. Now, how do I do this? Now, no, it does not take mathematical knowledge. It just takes basic logic and understanding. And I'm sure all of us can draw a few diagrams using a computer. So now markets move in three different ways. It could be bullish, which is upwards, it could be bearish, which is downwards, or it could be consolidating, which is sideways. So now if you look at this particular currency pair, which is British pounds to Japanese yen, GBP, JPY, overall the market is moving downwards, or it is in a downtrend. Now, based on looking at this particular chart, I can make a few diagrams, like for example, nothing I see right now for it, but a while ago, actually, I'd taken this trade. So there was a downtrend which formed right here. So there was one touch, two touch, and three touch on this particular line, which is called a downtrend. And I know that at this point, if I sell, I can make money. So this is exactly where I sold, and this is where I bought again. In the markets, you can first sell and buy later, and that is called shorting. That is another concept which you can research about yourself. I don't really want to explain that right now. So the technical analysis is looking, drawing that line, drawing maybe, a box over here, looking at a few other indicators like this and this, like, you know, making sure I put up everything that I need to understand this particular um, currency pair. So that is what technical analysis is, and it can be done for anything whatsoever, whether it's stocks, crypto, commodities, where is XAUUSD here? XAUUSD. This is gold. There is US oil. There is a lot of different things that I can look at and predict short term movements for. So that's what technical analysis is. It is the short term movement. It is reading the charts to predict the short term movements of anything in a financial market. That is all I had for this particular topic on the different types of analysis. Yes, there is a third type of analysis, and that particular analysis is called a hybrid analysis, where you take a look at both of these things to make sure that they are in synergy. Now, for example, I trade in the foreign exchange markets and I see a particular currency pair, say GBP USD, and I'm looking to buy. I just go to Forex Factory, as I stated before, and make sure that there is no news or anything like that that could disrupt my particular buy. Like, for example, if President Biden is giving a speech and that could potentially make the price of the US dollar go haywire. So what I will do is I will stay away from that currency pair at that particular point in time. That's what that's what a hybrid analysis, an example of a hybrid analysis. So it can be done even for long term, where you look at the perfect time to buy. So there's this particular principle in the stock market which is called buying the dips. Whenever the market is at a low, you want to buy more. When it goes up and it comes back down, you want to buy more. It goes back, it comes back down, you want to buy more. This is what it's done for long term investing. You keep buying more and more and more. So technical analysis can tell you when this particular best time to buy is, when this particular low is. Even though you're investing for the long term, you'll need to know when the best time to invest in is, to maximize your gains. And that's what a hybrid analysis can do for long term investing. So that's what the different types of analysis were in any financial market whatsoever. Now, there is something which is majorly overlooked by most people in whether they are investing, whether they are trading, and it is the concept of emotions. So now this is moving into my third topic, which is the role of human emotions in trading or investing. Now, I'm going to be sticking to the foreign exchange market for this because I personally have the most experience with that particular market, and I prefer to speak out of my experience rather than just speculation. So, now, when you're a trader in the foreign exchange markets, you may have a spot on analysis. Like you may exactly predict when the price go when at which point the price is going to start rising or at which point the price is going to start falling. But if you don't have your emotions in check, you will not be able to make money. A lot of people say, like I have actually written a research paper on this where I interviewed a few millionaires around the world and a few successful traders in the foreign exchange market. They all state that trading is only 10% of your analysis and 90% your emotions. This is what controls your success in the long term. Yes, you might take a trade and you might succeed once in a while, but consistent growth can only come with control of emotions. So now, what are these kind of negative emotions that I'm talking about? One of these emotions is, what do you call it? One of these emotions is fear. Now, we are trading in a financial market with our actual money. So, because it's a financial market, there is always a chance of making money or losing money. Now, you need to make sure that your analysis, your risk to reward ratio, and all of that is in check. So that, and once that is in check, you need to not fear the market. Because of fear, a lot of people, what they do is they enter early because they don't want to miss a particular trade. Now, if there is a particular trend going on and before it touches, they enter the trade and they lose it because it goes up and hits the point where it was originally supposed to. They lose money on that particular trade. Or it goes down and hits the point they were particularly supposed to, based on whether you were buying or selling. So, that is one of the emotions, fear. Now, this could also be in the form of FOMO. People enter late because they may feel that, no, I don't want to miss out this trade, I want to make this money. So that also is a major emotion that people face in the foreign exchange markets while they're trading. Third is revenge. Revenge trading is a phenomenon faced by several traders. I have myself done this. I'm not very proud of it, but it is what it is. So revenge trading is basically, say I lose a trade right now, I take another trade and I over leverage so that I can make up for this trade and make more profits. Again, I lose that trade, I over leverage even more to make up for this trade and make more profits. And in that process, I blow my entire account. I lose all my capital which I have. And that is when the feeling of revenge comes up. There are a lot of other emotions that people face. Anxiety. Now, a trade, like a swing trade in a foreign exchange market, can be like I enter and I don't want to exit the market for, like, say, an entire week. People get super anxious because they keep looking at the charts all the time, and they say, oh no, it's going up, oh no, it's going down, oh, I don't know where it's going to go. That anxiety leads to people selling earlier than they should or buying earlier than they should. And because of that anxiety, they lose out on a lot of profits that they could, potentially make. These are just a few examples of the most prominent emotions faced. There's also anger, there's, excitement, there is overconfidence. There's a lot of different negative emotions that people face, and they don't realize that decisions are taken here, which is processed through emotions. And if you cannot think objectively, if you cannot control your emotions and set them aside, you will not be able to be successful in the foreign exchange market or any other financial market, in my opinion, consistently for a long duration of time. So, that being said, you guys need to do things to be able to elevate your mindset, elevate your emotional intelligence, and increase your emotional control. And a few things that I have found are really helpful doing my research paper was reading books, listening to podcasts, meditation, and in fact, the most positively used, most commonly used, most powerful one is practicing having a positive circle of people around you, around everything that you stand for, and people who have goals similar to yours, because these people are not going to be wasting time, not going to be um, unproductive. They are going to push you to do your best rather than be jealous of you and pull you down if you're not really doing that well. So these are a few practices that you can employ. There are, of course, a lot more that you can employ, like working out, which has personally helped me a lot. I've been going through this massive transformation mentally and physically for the last year almost now. And I can tell you that I am a lot happier than I was a year ago, irrespective of how much money I've made or how much money I've lost, irrespective of how much my financial situation has changed. I am a lot happier. And that is what you want at the end of the day, right? Your goal is not to be the richest person on the planet. I mean, it could be if that's what brings you happiness, but your goal is to truly be happy. And these personal development methods not only help you make money and reach your financial goals, but they will keep you happy irrespective of whether you reach your financial goals or not. And that's why I feel that it's super, super essential for you guys, everyone, to concentrate on their personal development, about their to improve their emotional intelligence. And if you guys need anything at all, like, this overall sums up what I had to speak today. I don't really have anything much to add right now. There is a lot more that I can tell you guys. If you guys are curious, if you guys want to learn, please feel free to reach out to me on my Instagram at any given point in time. I'm always available. I am a person. My Instagram link is right here. Note it down if you'd like. Reach out to me. I really like helping people truly. And over there, I create some content to be able to make you understand investing or trading a little better, how to improve your life in your emotional aspect better as well. So please feel free to reach out to me at any time. And yeah, that's what I had for today, guys. Thank you so much for hearing me. Now, if you guys have any questions or anything, um, that's completely up to you.
So, Sanskar, I think that was a really informative session, and the way you showed us how human emotions play a role in actually trading and investing in stocks, that is some, another dimension to look at while you're actually investing, right? And knowing that you have written a research paper on it, it definitely, you know, it's something to think about every time you trade, right? So,
Definitely.
here, I think we have a few questions from our viewers. So
Mhm.
I'll first put up the $1 million question. I think we all know what that's gonna be. So here it is.
See, if you want to talk about cryptocurrency or Bitcoin in particular, see, I can give you my personal opinions based off of my analysis. Let me put it out there that this is not investing advice. I'm not telling anyone to particularly buy or sell Bitcoin. I can tell you what I have in my portfolio. I have just purchased some more Bitcoin last week. I purchased some more Bitcoin 3 weeks ago. I purchased some more Bitcoin a month and a half ago, and I'm not looking to sell anytime soon. So if you guys can decipher whatever you want from that. This is not investment advice at all. I think that should answer that particular question.
Okay. Moving on to the next question. It's here.
Awesome. Can you tell us 5 US stocks that you think would do well until the end of this year? Please let us know why you think they do well. I do not invest or trade in the stock market. So my knowledge about stocks in particular, about the US especially, is very, very limited. So I do not have an answer to that question. Really sorry about that.
Okay. So the next one's right here.
Sometime back, forex trading softwares were introduced, which used to run on autopilot on some benchmarks set by the user. Are they still popular? How effective are these autopilot softwares? So, I have actually done a detailed research on this. These can be very, very, very accurate depending on how good or bad the software is. If you're using top of the class software and you have the capital to invest a lot of money into really high internet speeds, really high gadgets, really, a lot of good machinery to be able to run those autopilot softwares efficiently. I don't know about how popular they are, but I can tell you that they are very accurate and they can turn profits successfully, consistently. All you need to do is turn it on and leave it out. Yeah, that's what I had for that one.
Okay. So moving on to the next question. It's right here.
As someone starting to gain interest in finance, is there any books or shows you'd recommend? Yes, definitely, definitely, I would. Obviously, there is the mainstream Rich Dad Poor Dad by Robert Kiyosaki, The Intelligent Investor by Benjamin Graham. Another book which I have really, really liked recently is The Warren Buffett Way. I don't remember whom it was by, but you can just Google it. It's called The Warren Buffett Way. Brilliant, brilliant book. It talks about how Warren Buffett looks at investing from someone who's looked at every single aspect of his investing through his entire career. So, beautiful, beautiful book to read. Shows for finance, I don't really think so, but I can recommend YouTube channels. Personal finance, I personally really like Ankur Wariku. He has a YouTube channel, beautiful content. There is Honestly by Tanmay Bhatt, which teaches you quite a few nice things. So there is also Varun Malhotra, who teaches a course in finance and investing and trading. Check those out. Those would be my top recommendations for books or YouTube channels or people to follow for finance in specific.
So I think there's a follow-up question to this.
Okay.
Yeah.
Personal development podcast suggestions. Yes, this is something which I absolutely love. Top of the line, no cap, no argument. Number one is Joe Rogan's podcast. The amount it teaches you is just insane. The kind of speakers he has on board. I personally really, really like the episodes where he talks to David Goggins. If you guys don't know who he's known as the toughest man on the planet, and his mentality is just insane. His two episodes with Joe Rogan, wonderful. His book Can't Hurt Me, David Goggins' book, insane. Apart from that, another podcast for personal development would be the becominggreat.com podcast by these two Swedish guys. Brilliant guys, break it down very, very into basics and elevate you overall. And if I were to name another podcast, the Gary V Audio Experience, beautiful podcast as well. Yeah, those three I would say would be my top three podcast suggestions for personal development specifically.
Okay. So uh, there's another question right here.
How do we analyze the income statement accurately? See, there, I wish I had the time to sit and explain that. I could take a lecture on that for like 6 hours, okay, and it wouldn't be enough. Okay, so there is a lot that I need to take into account when I need to analyze the income statement accurately. And again, as I said, I am not the best person to ask about the stock market. If you want to talk about trading in the foreign exchange market, cryptocurrency, futures, options, I'm all ears. But investing in the stock market, please ask someone else. I don't want to give you incorrect advice.
Okay. So I guess we'll wrap up the Q&A session with this. And
Sounds great.
personally, I, on behalf of the whole team of Profitech, thank you for taking out time to, to be with us and share your valuable information with all our participants. So I really look forward to interacting with you in the future. So
Likewise, thank you so much for having
yeah,
me on board. It was really great. Some nice questions, and yeah, I definitely feel that we should do more of such um, lives in the future for more people.
sure. The next time we organize another hackathon, you're sure to be there, right? Is it safe to say
For
that?
sure, 100%,
Yeah.
100%.
Okay. So again, thank you for your time. We really appreciate your valuable insights. So
Thank you for having
okay.
me.
Bye.
Bye.